There's already people in chat. Welcome, ladies and gentlemen. I am the Crypto Crow, here with my guest, Simon Dixon. We'll be right back after this brief disclaimer. Stick around.
You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins. Grow your coins, grow your coins. You gotta grow your coins. Grow your coins, grow your coins.
And we are back. Welcome, Mr. Simon Dixon. How are you, sir?
Awesome. Thanks for having me.
Absolutely. Now, I've been doing a little digging on you and just trying to find out who the hell is this guy and what's he all about. So I will let you kind of tell the world who you are and kind of what your thing is.
All right. Okay. Well, I was originally a banker. I worked in investment banking. I left in 2006 to work on some economic theories. Originally, that's what I did at university, I really gave lots of lectures on the future of money and challenges with money. And I came across somebody that sold his house for Bitcoin and moved into a squat in London with some of the very early developers. From that chance meeting, because I was writing a book on the future of money, I got invited to speak at the very first Bitcoin conference in the world in 2011. And so I gave a talk on the difference between Bitcoin and banking. Wrote the published book that I wrote, Bank to the Future, was the very first book in the world that included Bitcoin. I founded banktothefuture.com, which has facilitated funding rounds in over 100 different companies, including some of the early ones like Kraken, Bitstamp, Bitfinex, Shapeshift, BitPay. So I've invested in over 100 different companies in the industry, just been advocating Bitcoin as it relates to disruption in the traditional financial market for a long time now.
So you are a Bitcoin believer?
Definitely, yeah. I mean, Bitcoin was still am.
Well, I hope so, because it's not going anywhere. We were about to fight. So tell me, like, and not that, we're necessarily plugging a bunch of stuff, but obviously you wrote this book, Bank to the Future. And I haven't read it, obviously. But I'm interested. Tell me a little bit about, like, the book, just to give kind of people an idea as to what you're putting out there.
Sure. Okay. So, I mean, it was originally intended not to push Bitcoin, but it happened that I included Bitcoin in it. But it was really a fiction and non-fiction book, because I'd spent years discussing the history of money and teaching people about, how money's created, and no one just gave a shit, to be honest. The message was really boring. It took the financial crisis till people were actually interested in 2007, 2008. And then I decided to write a book, and because I'd given so many lectures across the world on the subject, I wanted to do it fiction and non-fiction, designed for anyone that didn't understand finance at all. And so the reason we called it Bank to the Future is because essentially we did a little time traveling. We went back to all of the financial crises in history and traveled to the future after making a few fixes, and then looked at what the future was, and we kept traveling back, and we gave a banking almanac, like in the film Back to the Future. And then eventually looked at a world with a financial system that works, and Bitcoin was involved in what that might look like.
So, who's Satoshi Nakamoto? Do you know?
I got theories on the group of people that I think it is, but no one knows.
What's your theory? Because I believe it's a group, obviously, as well. Even in the white paper, which I actually read. It's only 9 pages, yeah. Folks. If you haven't read it yet, you're crazy. Yeah, I mean, it's all we this, we that, our philosophies and so forth and so on. So I do think it's a group. What group do you think it is?
I got some theories. I don't tend to talk about those. It normally gets pretty controversial, but
there's nothing wrong with controversy.
I do think that Craig Wright was around. I do think he was around there. To what capacity he was involved, I don't know. But the person that got me into Bitcoin was a guy called Amir Taki that invited me to that conference. And then it really was. There was about 40 people in the conference. It was really activists, people that wanted to take down the banking system, and then a bunch of computer science geeks that were really interested in the technology. And
when was this conference?
This was in Prague. I could only really describe the venue as a crack den in Prague.
I mean,
you had to actually knock a few times. It was in 2011, November 2011.
Okay. So a couple years after inception, really. And so
yeah.
So you have theories of who you think it is, but you don't want to say. We'll have to figure out how to get your theory, because I'm curious. So where do you there's so much to discuss that I don't even really know where to begin. I guess we can start with where is your mindset based off of the Red Sea that we're having right now? Kind of explain to people your perception of what's happening, if you will, and give people some insight as to what you think is coming in the near and distant future.
Sure. Okay. So look, I fall into the investor camp. I'm not a trader. I mean, I was a trader when I worked in the financial markets. I was a market maker on the London Stock Exchange for alternative investment market stocks. But I stopped trading when I realized how the middle people and the insiders are the only one that makes money as a result from the 90% of people that are all trying to guess the markets. But I'm an investor, and the original reason I got into Bitcoin is from that original talk where I was talking about the difference between Bitcoin and banking, and that was 3 properties. And the first is that with traditional, when you deposit your money at a bank, the bank becomes the legal owner of your money. With Bitcoin, it was the first digital asset class where you could actually own your own money. The second is that when you deposit your money with a bank, the bank spends it as they wish. With Bitcoin, it created a peer-to-peer payment system with censorship resistance where you could transact with anyone in the world as you wanted. And the third property was that traditional money is based upon debt, and it rewards people that take on debt because it's an inflationary currency where the value goes down over time in terms of purchasing power. And Bitcoin was designed as the exact opposite. It rewards the saver. The people that saved are the ones that are wealthy. The people that took on Bitcoin debt are the ones that went bankrupt. And it's a deflationary currency where your purchasing power is designed to go up over time as long as it gets more useful. And so what I've seen over the years is it become more and more useful to more and more people. And so my investment thesis was there's only 21 million of these things. They're only going to get more and more are going to get lost, and more are getting, over time. So there's less than 21 million supply. And I believe with every financial crisis and every challenge, they're going to get more and more useful to more people as people realize the utility of owning your own money, spending your own money, and have a monetary policy based upon savings rather than debt that rewards the saver. But forward that to where we are today, and we're exactly, in my eyes, where we were in 2013, 2014. And in 2013, there was obviously a big pump, the price of Bitcoin. I mean, I've personally seen my Bitcoin go from $30 to $3. That's a 90% correction. I've seen them go from 1,250 to 250. That was a 75 approximate correction. And now I've seen them go from 20,000 to 5,000 or wherever we go next. This is very normal behavior when it goes from parabolic, pumps to corrections where people actually really focus on building the technology. So my forecast from here is that we'll see a very similar pattern to what we saw in 2013, 2014. And we've got to wait for people to get completely despondent, to dump a lot, the non-believers that don't understand the economics of Bitcoin, to dump it, get despondent, and I think that that's what we're going through right now. And then eventually we have a sideways market where we get lots and lots of technological innovation because the people that are in are still only the ones that actually believed it in the first place, or the hodlers. And so the only difference really is that in 2017, whereas in 2013, it was popularized as a result of like Silk Road and people understanding some of the controversial events. And then in this year, in 2017, we went from, maybe not everyone understood Bitcoin or know what it was, or even had a perception that it was a Ponzi scheme or something stupid. But everyone in the world knew Bitcoin, and that's what changed in 2017. And now we're going through the same thing that we had in 2013, 2014, but this time with a lot more people involved. And so I think we're going to have a sideways market again, into a gradual increase, and then people realizing that we're heading towards a 2020 halving and remembering the economics of Bitcoin are still the same. There's only 21 million of these things. They're more and more useful every year to more and more people, and there's more and more of them are getting lost, and it's a race for the cheap Bitcoins again. Then we go into parabolic increase where 20,000 looks like a thing of the past, and then we just repeat the cycle again and again until eventually we reach the phase where this is actually used as money, and once it's used as money, then there's no longer an investment store of value like it has been in the past. It becomes a medium of exchange.
Do you really believe it'll be used as money over a store of value?
I personally don't know, because I don't think anyone's going to start thinking into it. Will be money when people think in Bitcoin, and I can't get my head around. I've been involved with it for so many years, and I still can't price things in Bitcoin or think in Bitcoin. I still think in the local currency of wherever I'm traveling.
Right.
And I just don't believe that a fixed supply asset class will ever be non-volatile. But I can imagine a world where Bitcoin, there's a game theoretical approach where central banks around the world, the smaller central banks are trying to beat the larger central banks in terms of power. And so they make a bet on Bitcoin and they start holding it as a reserve, as well as their dollars and treasuries and other things. And then eventually one of the larger countries or central banks will come along and announce, try and accumulate as many Bitcoin as they can. And then it will be an announcement that they do, and that could create a self-fulfilling prophecy where the price increase in Bitcoin creates a game theoretical situation where the central bank with the least amount of Bitcoin could become the most irrelevant central bank in the future. I do believe that something like that could happen, and then Bitcoin could become some kind of the first time that we've had a non-political, non-empire-based reserve asset or currency or whatever you want to call it, with lots of innovation that sits on top of that and connects with the fiat systems and central banks around the world.
Yeah, so far I pretty much agree with everything you've said. To be honest, I wasn't expecting this, so that's interesting. So how do you feel about Bitcoin as it relates to the altcoins? And like, by that I mean, obviously everybody seems to be waiting around for the CBOE ETF, thinking that that's somehow the second coming of Christ for cryptocurrencies, when in reality, I feel like everybody's just kind of looking at that as permission to get involved. Like, obviously the institutions are looking at it as a way to get in legally, and it's solving some of the problems for them. But I feel like the retail market, who by and large rose this market up to $850 billion in 2017 or early 2018. I feel like a lot of those guys that got burned buying at the high, chasing candles and doing everything they could to try and get into this thing, because let's face it, the higher we went, the more press and news was blowing it up even further. And then it just seems like all in one day, it just switched. Like somebody hit a switch and said, okay, done. And it like everything changed overnight and the market started crashing. I've never seen anything that felt more controlled in my life. I mean, and I have to wonder, out of those people that got burned at the high, buying it at the high, and then ultimately dumping as it was falling because there was no end in sight, I feel like a lot of these people are waiting on, they're either out of the game entirely and they've sworn it off because they're like, oh, I got burned so bad, I'm not touching that shit ever again, I don't understand it. Some of them who are smart have spent this time educating themselves on the crypto markets and how things work and the patterns and the historical, the history of the market, and they're waiting to buy in. And I know this is all very long-winded kind of question, comment, rant, but you know, where do you see things going? Let's say, you know, based off of the ETF, let's say that this ETF doesn't even come until February of 2019. Do you think things will start to rebound prior to that, or do you think things will remain so manipulated that everything's going to be held down like, you know, like we're being drowned underwater until it's time to let us breathe?
Yeah, so with regards to manipulation, Bitcoin is like all other asset classes, completely manipulated. Every asset class is manipulated in the short term, but it tends to reach a fair value or fundamental value in the long term, unless you believe in a greater conspiracy theory like many people have with gold. You know, all markets are manipulated. Bitcoin is one of the worst short-term manipulated markets. It always has been. It always will be. That's just markets. You know, look at traditional financial markets. Look at the entire global financial market. You know, it was manipulated by banks making fraudulent loans to people that couldn't afford to repay those loans. And then the central banks and the regulators colluding with creating mortgage-backed securities and manipulating the market so that everyone felt richer through their property, and their real estate values were manipulated for years and years and years, and they still are today, in one of the biggest Ponzi schemes we've ever seen, which is traditional fiat money, which is manipulated by property markets and all sorts of things we see today. So all markets are manipulated. Bitcoin is no exception. It just happens to be a lack of regulations means that you know, wealthier people can do it in a regulated and an unregulated environment versus the regulated environment where financial institutions, Goldman Sachs and hedge funds do all the manipulation and fraudulent activity.
Yeah, I mean, ultimately they're just buying and selling back and forth to each other, because I feel, in my opinion, there's very little retail market left to trade to. So, you know, if these guys are going to be swing trading 1,000 Bitcoin at a time to manipulate the market up or down, there has to be more than one group working together to make these swings happen, because who's out there buying right now? I mean, well, there might be some, but I mean, who's selling it at these prices? That's probably the better question.
Yeah. I mean, you know, there's a lot of Bitcoin has always been like this, because when people truly believe in it, when people are on the way up, people really believe in it, and when it's on the way down, there's every reason to doubt it, because there's something completely new here that, you know, you got to be kind of out there thinking to actually believe that something like this could actually have an impact in the largest, most entrenched interests, like governments and banking system and central banking system.
Well, it doesn't take a rocket scientist to see that that's the case anymore. I mean, let's face it, it's all over the place.
Oh, yeah. I mean, but it absolutely, you know, so many people still think that Bitcoin or this market is, they're either confused with, you know, things that are scams, that confuse people with ICOs, that confuse people with crypto, that then gets confused with Bitcoin. But the cold hard reality is that the investment thesis is as follows. Either the innovation of owning your own money, spending your own money, and having a monetary policy based upon savings rather than debt has long-term value, or it doesn't. If it does, the invention of the Bitcoin is our best shot. And you talked about competition with altcoins. There's only one shot at sound money, and that's Bitcoin. Everything else is doing something different. Ethereum's disruption in IPO markets and securitization. Altcoins, disruption in different user cases, whether it's Monero with dark market purchases. But there's only one shot at sound money, and that's Bitcoin, because it was created by somebody that we don't know, and it had enough time to get the traction and security that it needed in a time when nobody cared. So there's only one shot at that, and that's Bitcoin. It doesn't compete with anything else as far as I've seen yet. You either believe that has value or not. And the invention of programmable money is sound money, and the monetary policy that's based upon savings and doesn't have any political agenda of, you know, connected to any country. More and more people will find when they need to see that, you know, whether that's you know, people in Cyprus was the first pump when the bail-ins happened and people realized they don't own their money, or when Greece turned down the ATMs and people realized you couldn't get cash, or when India made their savings illegal, and people had to queue outside and risk getting their life savings stolen from them with bags of cash that they had to flush through the banking system so that the governments could get tax on that. Or so on and so forth, or, you know, Brexit or whatever it is. All Bitcoin needs to do is continue doing what it does, and the traditional economy will give people reasons to own their own money, spend their own money, and enjoy a monetary policy based upon savings and debt. The problem is that it's short-term manipulated, it's short-term volatile, and that means that it sucks if you're going to make purchases in the short term and you can't plan your life around that. Very and true. So that then still encourages people to want to actually save rather than spend, and that's a fundamental shift. And it gives people an exit from the traditional financial system. Where do we go from here? People go through cycles of realizing that and not realizing that. The day that Bitcoin is no longer a store of value, in my opinion, and it could be a medium of exchange for some reason, for some people, is the day that nobody thinks that Bitcoin is a scam. Nobody thinks it's a Ponzi scheme, and nobody thinks it's just a currency just for drug dealers. The day that everyone believes that it's not just any of those things is the day that it will no longer go up in value. As long as people still believe it's a Ponzi scheme, it's a currency for drug dealers and nothing else, or it's a scam, then it's still undervalued.
Good question coming up in chat, actually. Christine Goodale. The difference with today is the futures, and since the arrival of the futures in December, the price has been crushed down. How do you think the futures market does and will continue to impact the value of Bitcoin?
I mean, so they're cash-settled futures, so it doesn't actually interact with the underlying. We've now got the next version of futures, which actually are cash-settled, where they're going to have one day and other, where they actually have to back it by Bitcoin. And they can use the futures market in order to save delivery. But personally, I don't believe that it was the futures market that caused the downturn. Yes, it's a huge coincidence that the two things happened at the same time. But it was a parabolic bubble that we were in 2017, where Bitcoin just went up way faster than it should do. And when it goes up way faster than it should do, it tends to come down a lot harder as well.
I don't know. I'm going to have to disagree with you on that, only because the way I see it, let's say I had a few $1 million, okay? And I'm looking at this Bitcoin market, and I've been studying it for a while, and me and all my rich buddies decide we're going to go into the futures market. Well, what are we going to do before we go into a futures contract? We're going to buy up as much Bitcoin as we can to make sure that we, amongst ourselves and any of our other cronies, have the power to dump the price of this thing when we start to sell it. And then we're going to go into our futures contracts, and we're going to basically bet on a particular price that we feel we can control in one way, shape, or form. We're going to go into those futures contracts, and then we're going to dump the shit out of everything we've got. And we're going to make sure that the price of Bitcoin meets our mark so that we're not only buying it on the way up, we're going to sell it at the top, and then once we start that crash, we're going to profit in our futures contracts as well. So we're basically double dipping. And I think that personally, that's what I think happened. And I think that because of the unregulated nature of Bitcoin and cryptocurrency as a whole, it empowered the people with the resources to pull shit like that to do it. And that's what I don't think it's necessarily a coincidence, but that's just my personal opinion. I'm just a dumb YouTuber.
Sure, no, I mean, but you can take that, but I tend to try and ignore the short-term manipulation because I'm not a trader, so I don't really care about the short-term swings. I mean, obviously, everyone likes to feel wealthier with their savings, and when the bear markets come, it's not a nice feeling. But if you're in this for the long term, I don't think these markets are going to prevail. Eventually, a futures market will lead to an institutional custodian solution and an ETF. And then the institutions, the pensioners, can fight the hedge funds as they do with all markets. But eventually, the fundamental value prevails.
Well, you see, we definitely have a different perspective on things, and I absolutely respect yours. The thing that you should understand about me is, I grew up poor, right? I busted my ass through my entire life to try and accomplish or achieve anything, and I was actually developing mortgage companies in 2017, and I was an independent business development consultant, and I was doing all right, but I've got a big family and lots of bills, and even with a six-figure income, I was check to check You know what I mean? And so when I got into cryptocurrency and I really started researching it and studying it and spending a lot of time reading white papers and building my mining rig and all of the things that a lot of my followers know about, you know, I discovered a whole new world that was a lot more exciting than the stock market. You know, the potential for much better returns, and you know, 5% in the stock market is like a good year, whereas 5% in crypto is like a dead market. You know what I mean? It's like that should happen within an hour. You're right. And so a lot of the people that come into the space, like me, who see the potential for opportunity, it pains me in ways because some people have just enough time to kind of get involved and learn a little bit, maybe play with some trades, or you know, maybe they want to buy something. You know, they don't necessarily know everything there is to know about it. They don't have the time to really research things. They don't understand the ebbs and flows of the market overall. They don't understand a lot of these things, but they still go into it as a trader. And so, you know, for guys like us who get it, and if we buy $1,000 of Bitcoin and watch it take a shit down to $200, we're not really freaking out because we know that we know how things work, and we're not dumb enough. We're not going to sell it at $200. You know what I mean? We know how this stuff works, and so my point is, I'm kind of you know what, one of those border lines between two states. You know what I mean? I sit right on one of those borderlines because I understand the pains and the excitement of the one side, and then I understand on both sides, really. And so I'm kind of the guy in between who I understand the fundamental perspective of the major players and all that, but then I also understand the pains of the guy who he's got $100 and he wants to make something happen with it, and it sucks to go into something and watch it all go away, not really understanding what's happening around you, right? It's like going into a fist fight with a blindfold. Sure,
yeah. I mean, well, the first thing to deconstruct from that is almost everybody loses money trading. Trading is a game for insiders, for rich people to make money at the expense of retail people. 90% of people lose their money trading and 10% make it. And those are normally insiders or people playing the middle, where they're market makers that are buying lower and selling higher. And the, you know, everything, and the proprietary traders in Goldman Sachs and Lehman Brothers. Well, Lehman Brothers got it wrong. But these are the people that are making money. So trading, 90% of people lose money trading. I'm not saying that you shouldn't be a trader, but you want to learn how to trade. You want to be a trader, then you will be 10% of people, because most people lose money. So, but I will say that I haven't. I'm either lucky or just my gut is strong. Of all the swing trades that I've made since I got into crypto, I've only lost on one of them that I remember. Which year did you start trading? 2017. Yeah, so the end of the year. Sure, okay. So you made money in the bull market. It's a lot easier in a market like that to actually make money trading than it would be in a market like the next year. I only trade Bitcoin though. So, and I would swing trade indicators of, for Bitcoin. I mean, and the thing is that I do a lot of research on what's coming. Like, I'll give you an example. Now, this is a trade I didn't make because I was leaving for dinner with my wife. But because of the patterns of, like, the futures market, there's a guy, I Love Crypto. For those of you guys out there, he's a good guy. He's actually in my influencer group. And he told us all, he goes, look, futures markets are going to expire tomorrow. We're going to see the price go up, and then it's going to crash real hard. You're going to see a falling knife. I mean, he explained everything almost verbatim to what happened. He missed the mark a bit in terms of the high he expected to see Bitcoin at, but it did end up going up about $600 over the hour that he said that it would, and he predicted that hours before it even started. And so, I would put a lot of that stuff together, and over the months, I would find other things like that, and I would go check it out, see how it made sense, and I would swing trade those situations. And the thing of it is because of the manipulation, because of the market, because of the pretty standard patterns between understanding, automated bots and how they work and how much volume they trade on a regular basis amongst different exchanges, you can kind of tell what's going to be a decent swing trade. And so that's what I mean. If this were a normal market,
I would think what you're saying is absolutely right, because it's much more difficult to predict things. But given the market where it's at now, you can kind of pinpoint some pretty easy trades in Bitcoin. Now, I don't trade alts at all. I don't trade altcoins. I only mess with Bitcoin. But that's just, that's all.
Okay. Well, so it sounds like you've got a strategy. It sounds like you're at the screens almost full time when you are trading.
Yes.
But what most people are doing is that they're actually got a job. They're trying to trade on the side, and they don't really have a strategy. They're just trying to catch knives and sell, sell low, sell high.
Right.
Buy low, sell high.
Yeah, right.
And so that's the 90% of people. You're actually seems like you're developing a strategy. You're learning the tools. You're following the market, and you're taking it more as like a career move to actually trade.
Yeah, this is all I do. I mean, between YouTube and trading and investing, that's pretty much all I do anymore. I quit my mortgage job like 3 months after I got into crypto.
All right.
Yeah.
There's so many people that I know that have got the crypto market has empowered them to spend their time doing what they love rather than things that they hate doing.
Right. So where do you see things, like let's say that this ETF passes? What do you see changing?
So the ETF is certainly one of those events that could lead us into a bull market if it happens. I'm not sure if it will happen for an awful long time. You
can't go any further than February, right? I mean, that's, even if they were to extend their decision again, it's got to happen by February.
Yeah, my guess is that they're probably going to try and deliver some more bad news, and then there's going to be another round, or it's going to be done somewhere else. It will be done eventually, but I don't think the SEC is fully ready to have an asset class, the custodial solutions, the reasons that they use for rejection is manipulation of prices. So they knew that that's something that no one can fix. You can't fix manipulation of prices because the price is based upon exchanges all around the world. It's a global asset class, and it's not controlled by one individual exchange. And so that reason is a reason that they could use on anyone. But then you've got the custodial solutions, which is a big problem to solve as well. I'm not sure the market is in that situation. And then how do you deal with the fork problems as well? Legal entitlement to forks when you're giving somebody else custodial of your Bitcoin and packaging it into a product that's going to track the price. There's a lot of challenges involved in putting together such a financial product, and I'm not sure the SEC is ready for that. But if they are ready for it, then there'll be billions and billions and billions of idiots' money all around the world that will want to take counterparty risk when they could have owned their own Bitcoin instead.
Right.
And more people will want to take counterparty risk rather than learn how to own their private keys. And they will do that, and then eventually they'll wonder why that asset class outperformed their other asset class, and eventually it will help people realize that the sensible thing is to own your own money, spend your own money, and save it on your own, and not be subject to the mercy of financial institutions telling you what to do with that money.
Well, I think the big question is that, and the way everybody seems to be looking at the ETF is that, ultimately it's resolving some of the issues related to custody and control and, things like that are basically going to open a gate for institutions to enter the space in droves should they choose to. And there's a lot of misconception to, and I've been trying to kind of explain things a little bit. I figured maybe you can shine some light or shade, whatever works for you. But, a lot of people seem to think that the ETF itself is going to draw in all this institutional money, potentially into the trillions, and that alone is going to drive up the value of everything in the market for us all, right? Like somebody's going to turn the lights on for us. And, but a lot of those deals they're no better than making over-the-counter deals that aren't even reflected on exchanges. So it's not like it's going to drive up exchange volume and thus exchange pricing. They're basically just going to be able to buy into these ETFs at whatever the prices the exchanges dictate at the time, right? Like there's no outside of just saying, yes, now the institutions can get in legally. What good is it?
The reason that it, from a purely economic and is that it's reducing the supply of Bitcoin, because the money held up in the ETF will actually have to be backed by Bitcoins that are held by the custodian. And those institutions and pension funds are typically long-term investors. And those investors have a fiduciary duty in order to protect their portfolios from black swan events and crazy events. And Bitcoin is an uncorrelated asset. So I forecast that lots of pension funds and all sorts of fund managers and different products around the world are going to have to buy a Bitcoin ETF in order to take away some of their risk against the correlation of stock markets, bond markets, property markets, and everything else that they're investing in. So the more people that buy into that ETF, the more Bitcoin will come off the market and be hodled by the custodian. And that is essentially reducing the available supply for people to want to sell and moving people away from short-term speculating and over to long-term investing, which will then, when people actually use Bitcoin and have a genuine user case, it will be a reduced supply as a result of the ETF, because it's such a popular way for pension funds and institutional money, which essentially is just your money, by the way. You're paying your insurance premiums and you're paying your pension every month, and your employees are paying this. So it's your money. But they're putting that together into these things that they call institutions, and then the fund managers will be scraping Bitcoins out of the market. So it does fundamentally change the economics of the circulation of Bitcoin if institutions do subscribe that, and my forecast is they will over time.
Good. I glance over at chat, and there's a pretty good discussion going on in there. I like it. I'm in a position where I just kind of, I have my alts. It's all in cold storage. I just keep it away from me. I don't bother trying to swing trade any of it. I don't really mess with any of it. Once I've committed to buying it, I throw it in cold storage and leave it alone. Bitcoin's my play toy because I have to I always have to feel like I'm active, right? I need to, idle hands are the devil's playground. So I've got to stay busy. And so being able to look at the charts and having a pretty good idea as to what's happening in any particular time. With Bitcoin right now, I feel like it's really not too difficult to do. It's not too difficult to find the swings, to kind of predict, like, once it hits this price, it's going to crash by $300-400 before it goes back up. I mean, it's fairly predictable, and I feel like it's predictable because I feel like there's so many manipulation patterns in play that, and it's like, while the volume is where it's at, and there are so few, especially in times like this, in the down market, there are so many fewer people trading, I should say, that there's less surprises. So, I find that interesting. What advice, not that we're giving financial advice, what opinions would you give people who are maybe new to the space? They're just getting into this stuff. They're interested, but they're scared to death. Or even people who maybe they heard from a buddy, oh, Bitcoin's going up. It went up $3,000 this week. You better not miss out. And they go in and buy it at 18,000. And then they got hit right in the backside, and now they're just confused. Like, what could you tell these people?
I would tell them that maybe re-manage your expectations. While it might be nice if you were in 2017 and you became rich enough to actually quit your job as a result of some speculative moves that you make, and then you got on the right side of the market, I'd say to reevaluate your expectations about what you can do. Most people in the world, they vastly overestimate what they can achieve in a year and underestimate what they can achieve in 5 to 10 years. And Bitcoin, to me, the easiest strategy in the world is betting that Bitcoin will have a real impact in the world, and the financial system will give it the opportunity to actually drive more and more value. And so, therefore, while you could take a percentage of your Bitcoin and you could try and swing trade, and you could look at some of these. You might develop a strategy that works for you, but make sure you don't get on the wrong side of a short trade and end up with no Bitcoin. And don't have that, because at the end of the day, there is a race for the cheap Bitcoins. If you're looking at this in the next 10 years, in 2020, the Bitcoin supply halves, and then it happens again. And by 2024, almost all 20 million Bitcoins would have been created. I would look at that not as the opportunity to get very wealthy in the short term, while you might. I'd look at this as a replacement to some of the Ponzi schemes like pension funds. And while your pension fund is a low risk Ponzi scheme, Bitcoin is actually something that if you started earning some Bitcoin, maybe you don't even need to buy. Maybe you can deliver some of your services in exchange for some Bitcoin, and just take a punt, because Bitcoin is either worth nothing or it's worth a lot more. I don't see an in between.
Right.
And it's if you're looking at this for the next 10 years, you're either going to have a pension pot that'll be worth significantly more than what you had before if you were on your normal path, or you're going to have 10% of your income that you might have wasted on something that ends up worth nothing. I think that the risk reward ratio in terms of reward versus the risk that you would need to take is significantly in your favor with Bitcoin, unlike any other asset class in the world. And then once you got Bitcoin wealthy, if you then want to quit your job and start doing swing trading and things like that with a percentage of your Bitcoin, then go ahead. Or maybe it's different strokes for different folks, really. But I believe that everyone should have a savings portion of Bitcoin in their portfolio with a 10-year time horizon.
Right. I tell everybody you should have at least one and hold it. Just no matter what, just always at least keep one and hold it.
Absolutely. Then if you want to get more speculative and start looking at altcoins and things like that, then yeah, they're great opportunities to make or lose your Bitcoin.
What do you think about Cardano?
Cardano is an interesting one, because I remember when I was in Japan several years ago, and it was created in Japan, and it had a really negative reputation because it was part of an MLM. It was launched as an MLM. And then suddenly, a few years later, it reappeared, and Charles Hodgkinson was involved in it, and I think he turned it around and turned it into something that seemed like a legitimate project in terms of computer science and innovation. So I was surprised when I saw
as a multi-level marketing coin.
I remember I was in Japan and I was pitched this MLM coin called Cardano that was originally a coin for a gambling ecosystem, and it had a lot of Japanese people upset because they'd lost a lot of money. And suddenly, a couple of years later, it was reinvented into this reputable top 10 market cap coin. Now, my view on Cardano, like all the other ones, is when I originally invested in Ethereum, I remember when this first came along, and this Vitalik, who was a journalist at the time for Bitcoin magazine that was interviewing people, and he tried to make changes on the Mastercoin protocol in order to launch smart contracts on Bitcoin. And then they realized how inferior Bitcoin was for what they actually wanted to do. And then he eventually went into, and he pitched the Bitcoin community to actually invest in Ethereum. And then there was this concept called smart contracts that people really didn't understand, that was originally funded by the Bitcoin community. And Ethereum almost went bust. It almost lost all its money in the last crash, in fact, because Bitcoin went from, I think it was the ICO was done when Bitcoin was maybe worth about $600, and for every Bitcoin you invested, you got 2,000 ETH. The price crashed down, and Ethereum almost went bankrupt and couldn't afford to pay their developers. They spent the $15 million that they originally had raised, and that became worth less and less and less. And then eventually, at the end of it, after about a year and a half, this technology got launched, and for about a year, nothing was really happening. The price was kind of messing around. And then you had this user case called the DAO, and the DAO came along, and showed that you could raise $150 million on the Ethereum blockchain. Obviously, we know what happened next. It all got hacked, but that led to the ICO boom because people realized you could raise more money on Ethereum than you could in an IPO, and then and so much of that was not predictable. Nobody knew whether Ethereum, the tech, would work, whether it was good, whether it was scalable. In fact, it had a lot of negativity. People were very negative about it. People were positive about it. The cold hard reality with all these things, Cardano, EOS, Ethereum, all of them, is the only approach you can take is look at the team. Are these people that look like they got a lot to lose and going to deliver upon a promise? Recognize that most of them won't work and diversify wide because you have no idea and you are nowhere near technically qualified enough to know whether this technology works unless you are. But I only know about 10 or 20 or 30 people that are technically qualified to actually analyze whether this technology is any good or is any going to work. And there's just so many different factors, involved in that. So you just got to look at what's got the right teams, what gets the best community, diversify wide. And one of those is going to be in probably, if you pick right, is going to be in Ethereum that will make you a lot more Bitcoin, and then you're in the game.
It's exactly how I feel, man. I love it. I got a history lesson today because I didn't know some of that stuff that you're talking about. That's actually pretty cool insight. You've definitely been at this quite a while. I had no idea. Cardano is my #1 favorite coin next to Bitcoin. So, right. I had to ask. There's, for whatever reason, man, when I first started reading about it, how, I'm sure it's the same with everybody. You happen across something that just gives you a really good gut feeling, and then you dive even deeper, and then that gut feeling's reinforced, and then you're just all in. Like, I'm not all in. I'm diversified wide. Overall, I think I have, 45 different positions. I kind of go at it like a venture capitalist. It's kind of what I tell people. You invest wide, and 5 of them will probably do pretty well, and it'll make up for any of the losses of the rest. And that's kind of the way I look at things. And if more of them do well, then fantastic. Hopefully, but we'll see how that unfolds. Anything you want to plug? Any final notes? Anything else?
Well, I guess the main project that I'm involved in is banktothefuture.com. The people that have been investing through our platform, they are shareholders in many of the most valuable companies. They got equity in Bitstamp, Bitfinex, Kraken, and over 100 others, BitPay, Shapeshift, and many others. So for those that are interested in investing in equity and tokens, and we've been doing this for an awful long time, and anything that we invest in, we list on the platform. We had a little dabble at the beginning of this year in our own token sale. So we launched the Bank to the Future token, BFT. And the user case that we got for it at the moment is people that own the Bank to the Future token and deposit 10,000 on the platform. They get priority access to all the insider, the deals that we're investing in before. You tend to see what happens in the history of token sales is it started as crowd sales when it really was thousands of people investing in purchasing these tokens. Bank to the Future is a securities business, so we always sold these things as securities, knowing that there was not quite the longevity in not selling them as securities. So we've always had that in mind. But then over time, what's happened is the regulations have kicked in a lot more. It's moved to an institutional game, and there is no crowd in it at all. Almost all of the deals are being sold to the venture capitalists and the insiders and people connected. And then they're probably not doing a public sale at all. So the market's moved. I don't think the regulations is improving it. All it's doing is it means that the insiders are getting in, and we're moving to the exact system we have in traditional finance with that, where the insiders are getting in first. And the opportunity moves. But anyway, at Bank to the Future, because we've been around for a while, we get invited to those opportunities. And whenever we get a deal, we list it for our members on banktothefuture.com to co-invest and co-purchase in the same things as ours. And if you're a token holder, you get those deals priority before everyone else.
Interesting. I'm gonna look a little deeper into that, because that's good stuff. I mean, you know, let's face it. I do a lot of research and I do a lot of work, but I love getting different legitimate perspectives on different projects and things. So that alone, to me, is pretty interesting. So I'm gonna check this out, man. I like it. I've been, hopefully you don't mind, I've been covering your face with your website, your Bank to the Future website, just to kind of show everybody what it is and where to go. Obviously,
it
links,
looks better than me.
Yeah, that's what I always say. Nobody wants to look at me too damn long. But links are all in the description below, so check those links out. Simon, thanks for joining me, man. This has been very interesting. We'll have to do this again sometime. And you know, and for those of you, like, this wasn't a paid interview. Like, this is just, you know, somebody interesting that I thought would be kind of cool. And kudos on that. And yeah, it looks like chat's been pretty well informed, and they've been entertained, and went pretty well. So that's all right.
Good. Well, cool. Well, I really respect the fact that you came from humble backgrounds, and crypto has actually allowed you to, you know, work full time on what you love in the industry. And I want to see that for more and more people. And I really think that education is such an important part of our industry, because the world is so far removed from the things that we all talk about. So, you know, just respect for your work and educating people, and you know, telling your story and helping people be involved in that. It's important work.
Thank you. I appreciate that. I'm definitely trying, but I'll always just be a dumb YouTuber. So, well, you know, my TV show does launch this month. I think actually it already started airing over on Biz TV. So I might take some sections of this interview and throw it on that network as well, because I think there's some pretty good stuff in here. So on that note, thanks for joining me, guys. I've actually got another interview at 1:30 that I've got to do, and then I'll be finally done for the damn day, because I'm tired already. So I'll be back in a little while. Simon, thank you for joining me. Banktothefuture.com, right? This is a Bank to the Future. Yes. BABNK. Well, you can just look at it. It's right there.
It will redirect even if you put bank.
It did redirect, because I punched in banktothefuture.com and it redirected me directly to the site. So good deal. Until next time, folks, crow your coins, and I'll see you here at 1:30. See ya.